so before we dive into current sentiment and stuff, we like to rewind not too far back, just where we came into the week and see where we're at now. Oh, and that's a beauty. Look at that. All right. So here's where we're at. And if it wasn't for earnings season, things would be a lot cleaner. But we knew we had to deal with that, right? So no reason to complain about it, right? We would have, individual names we would have been able to look to take advantage of. So that's kind of been a real pain in the ass. I don't know about you guys, but for me, I haven't touched. Let me see. Hold on. I didn't play anything today, by the way. Okay. And I'm trying to think if I played any individual name even for a day trade in this. Oh, yeah. I played one name. When was it? Yesterday? Monday? I lied. I was going to say I didn't play any names, but I played one name of a trade. But anyway, because of earnings, we spoke about this. Even, for that snapback sentiment trade, we were kind of interested in just because we finally had some decent sentiment support. It would have been tough. And look what's going on now. Like, let's say you even play it's a bad example, but a PayPal, and you run into an earnings, or I don't know if PayPal's going to drag down anything else, in the group. I doubt it will, but that's the risk. Or if an AMD happened to shit the bed instead of, come in with a solid number, that's that added risk we were talking about in individual names, so you could be okay with it. But like for me, the way I look at it, it's hard enough, right, to be right on direction. Like you want, if you're going to catch a rally, you want to make sure you get paid. There's nothing worse than positioning for a rally, right? All your signals are right, and you're in something that doesn't participate. And that's kind of the market we've been in for a while. All right. But where we left off, I'm trying to think Tuesday. I don't know if we spoke about this on Tuesday, but we definitely on Sunday. Okay. Sentiment for the most part, right? I think we did talk about this on Tuesday. We could have been close. We had more than enough coming into this week sentiment support here. So in other words, for this thing to bust, right, that way, you would need major fireworks. And the only thing that would be left, right, for us to lean on down here would be capitulation, panic, those type of indicators, bottom indicators, major bottom indicators, right? And if you did get a break of this to south, okay, those indicators are usually not too far away, because again, you sold and you've had so much de-risking already that if this thing rolls over with any sort of velocity behind it, that's where you get panic, right? And then those indicators we see once every couple of years these days, Sharpies, Bova Bull Bear, all those major indicators that show up only for major bottoms and because of capitulation. Though that would be the last stage, right? So what we got at was, if you're going to play for any sort of snapback squeeze on a long side during this whole environment, this is the place to do it. This was the place to do it. Okay. The odds were that if there was nothing catastrophic out there, that an exogenous event that just comes out of nowhere that we're not aware of, right? And again, we got to remind ourselves how rare those are. You know what I mean? How rare those are. Okay. So if there's nothing like that around, this should at the least hold, right? And what we spoke about is, you get these either multiple opportunities out of it, right, until they wear out all that bearish sentiment, or, you get something like this. Interestingly enough, this thing has a little bit of speed behind it. right? And we were talking on Sunday. It seems so difficult where you go, we had such bearish extreme on the sentiment side. It doesn't take much in this market to get everything back to neutral again. We're going to have a lot of the shorter term indicators are going to be cooked. We have another day like today, right? So it happens quick. It happens quick. I don't think we're there yet, especially not even talking about the magnitude of the rally time-wise. You had a lot of bearish sentiment here. So I think there's still time for this rally to live, okay? But, the quicker you have another couple of days and you'll have people talking about melt up again. I guarantee it. I guarantee it. So what you would want to see is you want to see this thing run out of steam, right? If you want to try to take advantage of this opportunity any further, you want to see this thing run out of steam, and then any pullbacks, again, legitimate pullbacks, legitimate down days, will more than likely be opportunities, because again, here there's enough there that buyers should show up playing off that. Okay, so, and on the flip side, again, for all you bears out there who are convinced this thing is the start of a bear market, I'm not even going to bother to argue with you because I have no idea. Okay, but if it is, I don't think it is, but it's possible. If it is, what you're going to have is they have to work off. In other words, they're not going to pay everybody here who's positioned for this, right? Everybody who's talking about the end of the world not getting paid more than not if they don't have to. So they're going to work them off. They're going to squeeze them out, right? They're going to convince them that they were wrong on their bearish thesis. And at that time, then they'll take the market south. That's how it usually works. Okay. We were talking about late 2018. Again, different time, but just so you get an idea of the price action and how the market plays out. Where am I? Yep. Wait. Yep. Here I am. Okay. This, right? For this to just go south and pay all these bears, extremely rare, right? So what they do? This, right? And remember what I was telling you guys, this doesn't look like much, but you went from, not even, but niner to niner, basically, okay? That's a pretty strong move coming out of such negativity, all right? And again, if we didn't have earnings right now, think about all the names that the squeeze opportunities and volume would pour into, right? First, you would get some leaders, then you would get, the next group of names, then you would get laggards, you would get, a bunch of different names to take advantage of outside of just the indices. Here, we just have, again, because of earnings season, you could take the risk if you want to, but there's added risk. Now we just had, I'm talking for myself, just the market playing a squeeze for as far as swinging, and not as much opportunity in individual names because of earnings. So that's the big difference. Otherwise, you're looking to play names here too. You're looking to play names here too, right? So anyway, nothing's changed on my half. I got some April SPY exposure. Not looking to sell it. That's why I took so much time. We'll play it by ear. If we get to a point where we lose sentiment support because of either this rally strong enough or enough time, a la the 2018 example I just showed you, then I'd probably dump it. I'd probably dump it unless we're seeing, bullish situations here. No, I didn't roll up. I'm leaving it as is right now. I'm leaving it as is. I'm not doing a thing. I'm willing, no, sure, Shake, I'm willing to play intraday without a doubt. But the point I was making is I lied. I was hoping I would say I didn't play in individual names to make a point, but I did play an individual name yesterday. But I've been leaning on more the overall market because of earnings. Because of earnings, you know. But the point I'm making is, as far as overnight exposure is concerned, I have no interest in individual names. Okay. And the reason being is because of earnings, and not just earnings in that particular name. You know, it could be somebody in the group. LAC. See, like that would be something that would be like, that's right up the alley, even if I was consider playing equity, you know, because it was short dated, decent action. They don't have earnings, but you know, I don't know if anybody else in the group is reporting that could affect the name. That's my concern. You understand? That's my concern. You know, you run into a Netflix type situation, you know, and even though the market has squeezed and did its thing, and you were right on your thesis, right? Leaning on your signals, you just caught a bad break type of thing. Yeah, I figured that, right? I figured that, right? Yeah, and listen, it could work, you know, to your benefit, but that still doesn't make a difference, right? I look at it as luck. Like AMD and Google beat. If you benefited off that, you were lucky. Okay. If you got screwed off of Netflix, you were unlucky. You know what I mean? That's just luck. Like, that's got nothing to do with what we were trying to do off sentiment support here, right? Like, the reason why we want to look for something to get long is not to get lucky, is because based on the stuff we're looking at, we have pretty good odds that these lows are going to hold and there'll be a squeeze that's worth it, right? All right. And so for any newcomers who are wondering why it was worth it, or maybe, you know, you weren't around, I mean, it's cool to review this stuff anyway. There was a lot of stuff that was lined up, you know, a lot of stuff that you just, if you back test over time, really has performed well off signals. Okay. Like this. Okay. Again, a pretty common, well-known sentiment indicator. And a lot of people get turned off to this indicator because they worry about tops. They try to nail tops too. But if you did the homework and don't worry about catching the short, you would realize that if you back tested this indicator, the bull bear portion of it ratio, you know, this thing has been money, has been absolute money. Okay. And you could see, I don't remember when this was it last? Oh, this is the most recent one, I think. All right. But you could see how deep into the green this got. And, you know, the last time it got there, you're talking about the COVID crash. Okay, again, not to go off topic, the beauty of the COVID crash, look how many, look at this. Okay, so you bought the lows, right? Then you see this little dip, you got another buy signal. That's another entry. This little dip, another entry. That's how sour sentiment was. This, another entry. This, another entry. And that's a beautiful thing. You know, that's a beautiful thing right there. Okay, that's the best case scenario off a sentiment setup. And, you know, a lot of times you won't get it as a market rallies like this. Okay, because usually the price action helps dictate sentiment, and you're not going to get extreme bearishness off every little dip, right? Because they're smaller and they're coming from higher levels. But people were so spooked from this crash that every little dip you had extreme bearish sentiment. You know, so that's a beautiful thing. But anyway, back to on topic, you had, you know, that was one of the major indicators that was there, you know, and several others that were there even prior that we were looking at, and we were just waiting for a few more to get there, right? Like this one. Whoop. Yep. Why? Why? Twitter, I swear to Christ. Oh, drawdown. What did I say? Downside? I don't even know what I write anymore. You guys know more than me, Mike. I can't believe myself. You guys remember better than what I do, better than I do. I can't. And I'm cursing out Twitter. So, right? So this one was another one. Exactly. We're a team. You know what I mean? So the more you get, the stronger the signal, right? Again, I'm just reviewing this for people who weren't around, so they know what I mean by sentiment support. And that's what we refer to as sentiment support. So when you get enough bearishness, right, which tells you there's been enough selling here that outside of a very rare occasion, buyers are going to show up here, right? And you can see, you know, how quickly things turn and how quickly market changes its look. Did we hit one? No, I think this was the low and then we bounced. I think this is the updated one right here. Oh, one. Yeah, one. Below the green line. I thought you meant this here. Oh, that's 0. Yeah, and again, this, the COVID crash. You know, Presley, that's the COVID crash, right? Prior to that, we couldn't even break a 3. And some other guys, some other stuff that shouldn't have even been there. Honestly, usually takes a lot more time. Like this AIM model, you know. This thing got to 0, I think, eventually. And you know, you're talking about some major drawdowns where this thing was at 0. So collectively, again, not to repeat myself, you know the deal, right? You had the downside niner, right? There was a lot there. Okay. It was well worth, like I said, it was well worth taking a shot if you're ever going to take a shot in this environment. You know, that's plain and simple. Now, was it worth, you know, going bananas and sizing up multiple positions into it? And I didn't think so, because we're going into earnings season, right? So right there, that took the name whole aspect of things out of the equation for the reasons I said, you know. So the only thing you would do is you would have to get out, you know, out of your skis on overall market exposure. And, you know, as long as you know your risk, right? If it is that one time where there is something major going on and you get caught, you want to at least have some ammo to take advantage of those panic lows, you know. So you gotta take that into consideration. Yeah, see, the easy, again, for me, I'm dizzy enough. The easy thing for me is to just push names aside, as I said, Presley, till next week, a week away, you know? And that's still the case. Like what we could see here now, right? You could get, let's say, some upside or some good earnings or whatever the case, that ends up rolling over and you get a little down move again. Okay? Again, so we could go and set up all over again and be in the same situation we were in. You know? And it may take time. Like I said, that 2018, that's what happened here. And believe it or not, it wasn't even the first rally. It was this one here that everybody was most bullish on. It wasn't this one. And then it caught them, and this failed, but this was one of the best buy signals you'll ever see, right? So that's what we're looking for. Now, fast forward, what are we looking for here, right? If you don't have any exposure to the overall market, S&P 500 now, you can't look to put it in, put it on into a gap up tomorrow. That's not how you play this. You can't do it, because again, I'm not going back on the chart, but if it plays out, if 2022 is different than 2021 because the Fed is pulling liquidity out of the system, chances are you're going to get a lot more volatility, a lot choppier environment, right? And you're not going to see straight up like we normally see, and you could get shredded that way. You could get shredded that way. All right, and this rally doesn't have to end here either, because here's why, right? Think about what went on during this sell-off, okay? If players need to put some of that exposure back on, you get that overshoot. You know what I mean? You get an overshoot to what you would normally see, okay? Because here's one of the examples of putting back on, right? Okay, you had to put the call, which spiked, meaning players are hedging, right? They got to unwind those hedges, right? So a lot of times what you'll see doesn't have to happen, but it's definitely a distinct possibility. You get to put the calls completely wash out and go back to where they started. Because players who put those hedges on are taking them off now, right? So it's a lot tougher call from here, without a doubt. Okay, you have a lot more downside here, is more important. A lot more downside here, because here now, right, where's sentiment support here? Right, let's say in this zone. So this thing could easily come in, and you don't have those, the same high odds of a squeeze that you had down here, right? And here's the thing, to me, that's the most important. That's what I was trying to get the point across to you guys Sunday. It's not, I have no idea where this thing is going to squeeze to, right? The only thing I can do, like most of you do, is draw a line. Some of you call it technical analysis. I call it just how the market behaves, and I've seen over the years, right? Even if you're in the downtrend, you get, where'd my pen go? They stole my pen. Oh. You get a rally, right? Something like that. Right? So at the least, you get something like that. So that's the only target I got. Now I'm just paying attention to how sentiment shakes out. Next week, flow is going to become a whole different ball game, because a lot of earnings are going to be on the back burner, so we get some cleaner action, and we'll see. Okay, we'll see. Hopefully this thing fizzles out here at some point, and next week we're going to know whether players are aggressively positioning in any names or not. I think that's going to be the most important thing now that we've got, now that you squeezed off those lows. So it's impossible. Like, even if you could predict the future, I don't, like, for me, the stuff we're looking at, I don't see how it's possible. Tell me, what sweeper activity and sentiment's going to look like, in a month, and I can have an idea of, whether it's going to be a bullish or bearish backdrop. Otherwise, I have no clue. I have no clue. Like I showed you guys, off the COVID lows, you had a gazillion buy signals off sentiment indicators as the market was going up. right? So ahead of time, I could have told you, no, you can't chase, but these were all entries. These were all entries. So that's why you can't predict. You know what I mean? Right? Usually you get a rally like this and sentiment will go right to here immediately. And I'd be singing a different tune. But that's not how this played out. Right? So that's why predictions are useless to me. How do you predict 3-6 months ahead? All right. Other than that, let's look at our Goldman indicators here. Are these them? Yeah. Nope. That's old. Right. So here, overall, right. So this would be extreme bearish, which would be bullish. Okay. So overall, here's the average. And the reason why this is not more to this side here, one reason: flows, money coming into the market. January, you had a lot of money coming into the market. Okay. So you can see all the flow indicators are all there. By the way, that's why BOVA, Bank of America Merrill Lynch, they don't think we're at a bottom. Okay, they think it's a tradable bottom. Why? Because we didn't see capitulation. We didn't see any capitulation, honestly. But they're talking about capitulation out of flows, where money gets yanked out of the market. Money still was coming into the market. Okay, so that's where these things would end up going over here, and that's where you would likely get the BOVA bull bear indicator, which is a great indicator in itself, flashing a bullish signal as well. All right, that's the only thing that was holding it up, that bull bear indicator. It was at a 3, bullish territory is a 2, and it was all because of flows. All right, but outside of flows, you look at like all the other stuff. Look. All right, AAII, we spoke about. Investor intelligence, you had a bullish signal. Their VIX indicator, you had a bullish signal. Risk appetite, you had bullish signals. And the only other one would be Sharpies, which would be the equivalent to this. All right. So again, not major bottom, right? Like we were saying, not panic, capitulation type bottom, but enough bearishness for a tactical rally, without a doubt. All right. Here, come on. Okay. This is an average in percentile of all the indicators. So down to that line there. Okay, major bottoms, you see how much lower they could go. You're talking about total wipeout. And here's some of their risk appetite. I'll post the other ones when I get off of this. Look at this COVID spit up. My God, risk appetite. That came off the chart. You know, crazy though. Yeah, I mean, definitely had some bearishness out there. Definitely some bearishness out there. This is cool too. I gotta look at this. Let me see that. US low volume stocks versus the market. That's that orange line. Look at that bath. All right. I wish we had, guys, I wish we had names and flow to talk about. You know, like today, you know, I don't know if it was because that many companies are reporting or the flow was just happened to be in earnings names. I mean, it was so, seemed like every order there was in the name getting ready to report. Every single name. Yeah, see, the answer to all these questions here, is the God honest truth. I just don't know. I don't, like, if you were to ask me right now what's even going to lead us out even if we were to start a new up leg here, I have nothing to base it on besides a hunch, because I'm getting there's no indication that a sweeper activity. It's all earnings positioning. I have no idea. Like today, what led today? Reopening names, right? Wasn't like the big tech names down today? I'm being honest. I haven't even looked at names much. I don't even know what went on. But I heard it was like travel names. Apple was red, right? Yeah, so I think all the big tech names were down. So think about that for a second now. Okay? There's my point, right? If you had earnings again, Apple, so it popped. But, if you're riding big tech today and, you get a move like this and the stock is down, you want to kill somebody. Expedia, Airbnb, those names, right? Yeah. Look at these names. They look pretty good, huh? If you were to like put a gun to my head now, Lourdes, I think the only thing that's left, okay, that hasn't significantly moved, like caught up to post-COVID, is the travel-related stuff. ExxonMobil had numbers, right? Wow. Yeah, airlines, cruise lines, that whole shebang. Like, look. Now, these are the dog of the dogs, but like as far as any downside compared to upside, I think these names could play catch up. In other words, this is where the real value could be in the market. But again, that's me going off feeling, and gut, and trust me, I don't want to put my money on that. So you shouldn't. I want to see where the momentum is going. I want to see what sweepers are buying. That's what I'm waiting for. These oil stocks, like I get, there's probably more upside, I'm sure, but like we kind of missed the boat here now. And you say missed the boat. A lot of you played these names, but these are, long in the tooth. They were going in. Meanwhile, they still catch flow. Devon, right? This one looks a little better. The underbelly names like this. Maybe there's upside in the underbelly names, AR and the boys. But again, I don't know. Oh, another thing that was pretty bullish, right? Was this. For those of you who aren't members, you remember we were talking about this. Remember we said it's not feasible a market's going to bottom when you got half the market that's cooked, not even neutral. They were hot, sentiment was. So the majority of them would have to get washed out, and they did. Look. So now, instead of basic materials being on sell signal, that's on buy signal. Biotech was already there. Consumer discretionary already there. Energy is the only one that didn't, well, this one, part of energy, cooled off to neutral. Mining was hot, buy signal. Financials were hot, buy signal. Semiconductors were neutral, buy signal. Technology was neutral, buy signal. Where was the other one that was? Oh, industrials was almost hot, buy signal. Housing, buy signal. Even utilities, where is it? Here it is, buy signal. You understand? So now, healthcare, look at that trip. Jesus Christ. Now you can, now you can legitimately say, all right, there's possibly enough washed out here now that we can get some sort of intermediate trading low, right? It was hard to get to that conclusion when you got the financials on sell signal, right? Mining on sell signal, basic materials on sell signal. energy, obviously, on sell signal. You know, it's tough to make that case. It's tough to make that case. All right, so that's what I would keep an eye on now, right? When these things start bouncing out of here, okay, and the further they bounce out, you lose that support. Again, that sentiment support, you lose it, right? And that adds more risk to the equation, okay? If the market chops around and you get some selling here and there off inflationary scares or whatever the case, right? These things are going to be bouncing around buy signal, and that could be a good thing, right? As far as long entries, right? It gives you more opportunities to trade. That's, I think, the problem a lot of people are going to have, especially some of these newer traders, okay? What they're used to doing is when this happens, okay, they buy here, let's say, if they're lucky, right? They buy here, then they buy here, then they're buying here, right? Then they're buying here, and they got away with it because the market's rigged, right? That's what they do. They're buying the same shit too. They're not buying different shit. They're buying Amazon, Tesla, this QQQ, excuse me, this QQQ call buyers up here. Let's buy it, right? And they got away with it. Now, if what's going on continues to go on until we hear different, and the Fed is trying to unrig the game, you're not going to see that anymore. You know what I mean? You're not going to see that anymore. And you'll get opportunities to where you bought here. If you sold here, you can buy here if you like. You know what I mean? That's how you get banned on Twitter. Why? Because I said the Fed's rigged? I mean, the market's rigged? The market was rigged. I love the market. I love QE. I love when the market goes up. I'm a long-only player, but I'm not going to bullshit. We're not going to sit here and have an argument. The market's not rigged. It's rigged. The Fed's in the process of unrigging the game right now as we speak. Let's see how that goes. Yeah, I mean, it's the truth, right? What do you think the Fed put is? What do you think the Fed put means? I got to think of the correct term. What's the opposite? Not the opposite, but is unrig the proper term? How do you random, fair, free market, right? Free market, efficient. Right. Unrigged is not a term, right? That's the Brooklyn in me. Unrigged. Like, what a monkey I am, huh? Unrigged. De-rigged. Well, that's like the hottest term on the street these days, right? De-risked. 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 They're de-risking. Doesn't sound right. Non-rigged. That would be proper English. No, they're unrigged. Whatever it is. I was talking about a verb. Like rigging. Unrigged. Non-rigged. No, non-rigged. You're right. All right. Next case. So that's the story. Anybody have any questions on anything or any of this? All right, so we're coming to an interesting point here, right? We still got a busy week of earnings too, guys. So we got to get through it in regards to individual names, we got to get through it. You know, you got Amazon. I don't think Amazon's as important anymore, right? You guys think Amazon's as important to the market? I don't know. Oh no, in a bearish way. In a bearish way. I can't see it having that big. Well, maybe. The stock has been sour for a bit. Yeah, listen, what I think the most interesting thing here now, you got, by the way, buybacks. That was another thing, right? You had the buyback blackout period that started to lift. So you had a couple things where they were turning on the spigots again. But anyway, you got, was it 5 weeks to the Fed meeting? And I don't think interest rates are the problem anyway. I think it's the balance sheet. And did you guys see, like, this is it? Look here. I posted on my regular Twitter. I think on here too. It'll probably be fast on my regular Twitter. Let me see if I can navigate. Right? So this is the Fed tightening the spigots. Right? COVID did it on its own. The Fed had no say in that. You could see, you talk about rigged game, you could see why. I mean, this is insanity. And guys, interestingly enough, I think this is the most interesting part of it. You see where this thing tops out, stops going higher? That's where all those speculative names, all those names we made a killing in, all the way up to there, stopped going up and just started to roll over hard. You realize that? And you're telling me the Fed doesn't play a part? Like, how can you make it? Yeah, the SPACs, the Kathy names, IPO names, all that stuff. Isn't that incredible? That's exactly where they topped out, Matt. And I think it's M3 money velocity too. It's nuts. It's nuts. So the problem in 2018 was that this thing started to really speed up and tighten quick. So it's going to be interesting to watch. It's going to be interesting to watch here. Because this has been kind of methodical so far, right? Nothing too crazy. But if they're tightening quickly, and that's why, like, a lot of people say, forget about what they say they're going to do. Forget about what people are saying, how many rate cuts are coming. This is it right here. This is them tightening the spigots with their mouth. You understand? Everything else doesn't matter. You could have Goldman Sachs predicting to raise rates 600 times by the end of the year. It doesn't matter. Because if they tighten too much, then what you're going to see is you're going to start to see the credit markets react, and then in comes your Fed put, and that's it. You're going to have the Fed pivot again. So these are the things we need to pay attention to more than what, everyone, it's like fear mongering out there, right? Oh, they're going to raise us, 7, no 8, no 9 times this year. Like they're playing hopscotch or something. Yeah. Well, listen, I'll tell you, Praveen, I'm not surprised anymore. Okay. And I'm even going to tell you, like, if this is a start of a bear market, okay, when this thing is ready to go south, I can almost guarantee you that people will be bullish and calling melt up. I guarantee you. The market does an unbelievable job of washing out everybody who would cash a ticket here or being bearish. And that's the thing too, guys, with unmelt, right? That's the thing too with sentiment, okay? Like, listen, we're all big boys and big girls here, right? You don't want to rely on anyone. You want to look at the information, the signals, the data, and you want to make decisions for yourself, okay? If what you're looking at has you all bared up, okay, and you don't want to be bullish, that's the last thing you do, okay? Sentiment still plays a huge part in what you do, okay? Because you can't be shorting new short entries or buying puts here, okay? Or even for that matter, here, right? You can't do it because you're not Houdini. You think you have enough time to get out of the way. Sometimes they squeeze hard immediately. Sometimes they give you some hope, you know, but just the opposite of what we talk about constantly. The risk reward on the short side is just not to your advantage here, right? If you're short up here, right, that's a different story. You may want to hold it. You may want to hedge a little bit, right? Whatever the case. But you can't start shorting here into, you know, bearish sentiment, into AAII flashing bright green, all those things we looked at. You can't do it. Yeah, you can't. But Matt, that's the point I'm trying to make when everybody asks me why I don't short. It's not that you're going to lose money every trade, right? You make money here, right? You make money here, easy money on the short side. And now, even though you see extreme bearish sentiment here, you built up such a bias and got paid for it that you can't get out of the way. It's not as easy as you think. You know, so you gotta try. That's where the discipline comes in. You know, especially on the short side, you need as much discipline as you can possibly get your hands on. You know, and you want to at least where, you know, the odds are even, right? Not when they're stacked up against you like that. And I'm telling you, it can overshoot, right? And we see that. It doesn't mean you're not going to see some sentiment signals here and the market not go down another day or so after that. Okay, but that's the worst thing that could happen, because then you think, you know, sentiment doesn't work and you're sticking to your bias. Yeah, exactly. The timing has to be perfect, and no one's that good. Trust me, none of us are that good. None of us are that good, right? But that's, and I think it's not going anywhere, honestly. I think the first half of the year, just because of the magnitude of the rally, the magnitude of the stimulus and the riggedness. How about that, Praveen? Is that a word? Riggedness? The amount of rigging that the Fed has done, right? I think that what we're going to see this year is a lot different than what we're used to. And I think that's a good thing for a lot of us, because the stuff we want to be disciplined about, you're going to get rewarded for now. Okay? You didn't get rewarded for that stuff the last 2 years. You felt like an ass when you sold something, right? Everything we sold, we were cursing out 2 days later because it went higher. You know, so now I think the stuff that, again, a lot of us who have been around a long time have been trying to build habits off of, I think those are the stuff you're going to be rewarded for those things now, because we're going to go into a more realistic market. You know, so you're going to want to buy when sentiment's on your side, you know what I mean? And wait for those entries. Sell if you got a nice profit and you were looking for just a trade. Wait for that entry again. You know, and that's where the game starts to make a little bit of sense to you. You know, when you see everybody making money because the market and SPACs just keep going higher. Okay, money's money. I'm not saying don't make money, but it's not a talent you have. Okay, it's not just you. Right, it's luck. Right, you're fortunate that the game is rigged. It was good on your part to see that and not fight that. But it's not like you found the light in this game. You understand? It's not like, oh, I think I got it now. You know, I think we're getting into a market where this is going to see what you got, right? This is where you're going to realize whether you have, you know, you built any discipline or any rules to stick by. You know, you're going to get a lot more truth in this type of market, rather than the market we've been in. So but that's what we got to do. That's the playbook, right? That's the playbook. We wait for our entries. Again, you're looking for just a trade. You take this off the table and don't think twice or roll, right? You want to try to catch the bigger ticket, go out with some time, leave a little room to add if you get another entry and play it like that. But you can't just buy up the ladder like a lot of people were doing the past 2 years. By weakness, like you wait around, it felt like an eternity for weakness. Even prior to the year before that was ridiculous. You had to chase green to make any money. So I think things get a little more realistic now. I think it's going to be a little tricky. I could be wrong, right? I mean, something could definitely change. The economy can go into the shitter, and the Fed all of a sudden has to print more money, just like that. Yeah. See, I think that's a possibility, like this, but that might be it. You understand? And then this happens. Like it can definitely overshoot to the upside because of all the hedging and de-risking that went on during this, because they got to unwind that. So kind of like what happened here, right? This kind of took a lot of people by surprise how fast and how much it rallied. Everybody thought the possibility of a new leg higher, and this was the correction. But, if you broke your rules, you got caught in this. For who? Grandpa, was he sitting on investments? He's probably got more money than God by now. Tell him we don't want to hear his problems. He's crying with 2 loaves of bread under each arm. Tell him to go to the racetrack. There's more enjoyment there anyhow. What the hell is he doing watching the market? Grandpa pulling his hair out of his head. If we could all wish to be grandpas playing the market, I'll sign up for that. Yeah, tell him to buy. Did you see that? That was the funniest thing. My boy sent me off somebody's site. All the Fed has to do at the Fed meeting is leave up a picture of that ape that Justin Bieber bought for like millions or whatever it was. What the? Oh my God! If that don't tell the whole story. Somebody had a post on their site that had one of those NFT apes that just was sold to Bieber for like $1 million. And when they asked the Fed, what are you trying to do here with the balance sheet and all that? He should just leave the picture of that NFT ape on there. This is why. NFT apes, $1 million. Unbelievable. But yeah, it's gonna be an interesting time. It's gonna be an interesting time. And if it is shaky early on here this year, the first quarter, first half of the year, probably sets up for a really nice second half of the year. And with the amount of shit that's got beaten up the way it has, you're gonna have a lot of opportunities out there. So for those of you who like to dig in and just want to do a little more than throw a dart at a stock and hope it goes higher with the rest of them, I think it's going to be an interesting year. Yeah, tech. What's funny? Like the tech trade, the value trade makes sense to me. It's just it gets so crowded so quick, that value trade. But without a doubt, you've had a huge run in tech for years now, where it can underperform for a bit, but who knows? I've heard that before. That's what I'm telling you guys. I can't wait till next week where sweepers start sweeping and I can see what the hell they're buying. And they may not buy anything. And that will tell us a lot. You know what I mean? They may not buy anything, and that will tell us a ton. Right? And what that will tell us is stick with the indices, stick with the ETFs, buy them when you have favorable sentiment, sell them into the rip. Yeah, well, was it down from the highs, AMD? I mean, that thing got beat up pretty good. So look where it is right now. Okay, look where it is. Like, what's changed? Because of earnings, they fast forwarded. This is what happened, Ani, with earnings. You understand? This is something we could have maybe traded and took advantage of, but because of earnings, it went there from A to Z, right? That's what happened. That's exactly what happened. Because look, right? Like this goes here. This is still, it tells us nothing new, right? Like we were talking about, if you rewind, remember like Teledoc? When everybody kept buying, like, look here, okay? Oh, this was, yeah. Like you dealt with a lot of agita in this stock. You even had this rip. I don't even remember this rip. Oh my God. You guys think this Teledoc will be around? This is legitimate name, Teledoc? What do you guys think? It's going to be around, right? It's not a .com. This thing, this is some bloodbath though. I know it's such a hot technology, but I don't know fundamentally, That's another thing, guys. The stories, don't get wrapped up into the stories, right? Oh, I see so many of them around. That doesn't make a stock go higher. So forget about that shit. Look at Twitter. Look at Twitter. How the hell is Twitter can't make money? Can anybody explain that to me? You have a gazillion eyeballs on the same thing every freaking day and you can't make money off it? Unreal, right? So there's the perfect point. Yeah, poor Elliot. I thought if Elliot, think about that, Ani. If Elliot can't turn it, who can, right? Really, Jay? This is good. This is interesting, this Teledoc. Like I'm fascinated to see how this turns out. Because again, every time I do this, right? This is what I do with every one of these charts. I go like this. Oh my God, what a bloodbath. Holy, how'd this thing get crushed so bad? And then I scroll back and I scroll back and I scroll back and I'm like, you gotta be kidding me. Look at the move. That's why these things are getting hit so bad. Look at this. Right? Like, guys, you think this is normal for a stock that does this? That's, 7 to 300 per lean. Oh my God. Oh my God. Oh, is that what it is, GD? Competition? No earnings, right? It's a hot technology. But we'll see. And again, this is a falling knife now, right? But mark my words, if you guys are right, and this is legit, I don't doubt you. I agree with you. But I don't know much about the business. But what you're going to see is you're going to see lows start to hold up where bearish news, they can't sell them. And then it's going to start painting the right side of this chart. You know what I mean? Where you can buy these dips. And it's going to do that, right? And then people will be talking breakout up here. Yeah, and Stephen, you look at some of the big winners of our time, okay? We were going through this on Sunday. Some of the shittiest stocks that you guys, especially you newer traders, some of the stocks you hate, like a US Steel or a Nucor Steel or Home Builders, whatever, they were the studs of back in the day, but they've run so much like Teledoc that they went into years and years, a decade worth of basing. You know what I mean? Yeah, the COVID traders, they have no idea what goes on with these things. You can't pull off a rally like this and that continues from here. You know what I mean? Like this was insane. That's a parallel, like Praveen said, 7 to 300. I mean, come on. So, but you look back throughout any of the names, any of the names, I'm trying, like, let's say a Nucor here. Right? Like the Nucor coming back into play. Watch this. Why is this telechart? Every time on Zoom, I can't scroll back like this. What a pain in the ass. You're talking about huge bases. Sideways. It just looks like sideways shit. Like if I could go back further, you'll see. But this new core was Teledoc back in the day. You know what I mean? Yeah, those stocks are done, Praveen. You know what I mean? Those are like the meme stocks. Those are, that's worth a bubble. But some of these growthier names, some, not all, but some of them are going to be new leaders, without a doubt. Without a doubt. Growth will get hot again, and some of them will be new leaders. Wells Fargo caught some weekly activity today. Weekly activity. The banks, right? The banks were the best stocks to own back in the day. You remember how awful these banks were for a period of time? Post 2008, no one would buy them. How about this? Energy. You guys remember how treacherous energy was for so long? And before that, when crude oil was $100 a barrel, energy was like the internet stocks. So they all go through phases, cycles. But they, like somebody hit the nail on the head. It takes time. It takes time. It takes a lot of time. Especially when they've run. Like we want to find new leaders. SoFi caught some spec action. I'm just not interested in this name, Jay, at all. I'm being honest with you. I know a lot of people like the name, but just because it's in that basket of names, these names, I think it's going to be a while, Jay. Yeah, SPACs, all that. I think it's going to be a while. Now, they could have some serious bounces, right? We've seen them. They look like they come back to life, and there's some crazy rallies. But there's too many sellers in these things. Yeah, that's an interesting name, the outdoor name. That was a big, heavily shorted name too. There's a couple of firms that are really bullish on this name. This ASO. Look at this short squeeze. I remember when it caught initial sweeper activity. And it was a huge, is it still heavily shorted? Yeah. Yeah, I guys, I'm being honest. I'm not trying to, dodge your name questions. I'm going into next week with a clean slate. I'm not looking for anything in particular. You know what I mean? I don't have any bias to a certain group of names. I'm waiting to see what sweepers are aggressively sweeping, and that's all I care about. You know what I mean? That's all I care about. I don't care if the name shovels dog shit. If they're sweeping it aggressively, I'm going to look to buy it. I'm being dead straight with you. Why? Because we're in a legitimate correction, and the names that catch the good looking action coming out of those corrections are usually the biggest winners. I'm being dead straight with you guys. I'm serious. I don't care, if it's a new name, initial activity, that's all I care about. That's all I care about. Gave birth to some huge winners, especially on the growth side. SE, Net, even Roku, all those names, I had no clue what they were when they were getting swept initially. So that's why, I'm going in with a clean slate. I have no exposure to individual names, right? Nothing. And they may not sweep. They may not aggressively sweep any new names for a while. And that could be we're in some consolidation or within this correction, But again, that's going to be a strong signal in itself. Yeah, well, exactly that, Louis. Like post earnings, that's where I'm looking. You know what I mean? Because now, listen, now all the action is all earnings related. We have no idea what's clean, what's not. They're all reporting earnings. Players are replacing stock. They're rolling. They're hedging, right? Like there's an example I'm giving you, whoever asked about SoFi. How do I know it's not a short hedging into earnings? It could easily be that. You're going to see all these type of names see call buying ahead of earnings, because anybody who shorted this and is sitting on profits, if they don't want to lock those profits in, they're going to buy calls to hedge. You know what I mean? So that's why earnings season's a big whoop. Useless. Useless. Now, if this thing reports their quarter and then you see sweeper activity coming into weakness post earnings, you like this name, that's your go. That's your go. Right? Because it's post earnings. So that's what I would, any names you're looking for action in, I would just watch them after earnings. And if you see patterns of buying coming into that name, you like it, you buy it. Especially if they've been beat up. So that's what I'm looking for. I'm looking for names post earnings with some time, and then I'll start picking off some names, that sort of thing. But I want real buying. I don't want one call buyer. I want accumulation. I want to see somebody getting excited about something. And we haven't seen that in a long time. I know, I get it. But there's a reason why we haven't seen it, because this market was running on fumes. You know what I mean? So the flow's even telling us that we should chillax because we might get caught in something like this. Right? We talked about it. They're buying Apple, Tesla, and then when they're rotating into value, they're buying Ford. That's all they've been doing for 3 months. Later, Lourdes. Enjoy the night. So that's why I'm excited to see what sweeper activity looks like over the next couple of weeks. I got one more week. Yeah, I'm still holding. Stephen, I'll be dead straight with you. I know it sounds a little ridiculous, but I'm kind of rooting that I can add exposure to the mix. You know what I mean? I'm tired of flipping the trade and then, being quick. We finally got a legitimate tug that I'm hoping that it plays out the right way, right? And just gives us some time. Even if there's another leg lower, I don't care, because I'll add aggressively down there, especially if Sharpies are there. So, but if you got in just for the trade, Stephen, you just wanted to play the tactical squeeze, you gotta be smart here. But I'm hoping, even if I have to roll, what's that all about? They had earnings, right? I think there's somebody who has, oh my God. Look at this chart. What is this? What? Why don't somebody just buy them out already and put them out of their misery? Somebody buy them out for like 7.25 and get rid of this thing. Yeah, they were sweeping it for the last couple of weeks into earnings. Did they have earnings? They had earnings today or no? Oh, not yet? Wait. Oh, no, they had earnings. I don't know much about the Bungie news. Presley, I heard it was big, but I'll tell you, when there's a good-looking sweep in Sony, they're usually money. So keep an eye out for some sweeper activity if you like it. Sony, they're rare, but they cash tickets. I remember when it used to be, wasn't the symbol SNE? Yeah, right? SNE. I think that's honestly when the last good-looking sweep it had. It did, right? Yeah. There used to be sweeps here once in a blue moon, some nice size. And their money, it's a good name. It's a stud. Yeah, so keep an eye on it. Keep an eye on the sweeper activity there. That's, again, especially post earnings, because that'd be a telltale sign. Even quality names like this, you got some nice yanks on these things. So I'm excited, even if it's a rough first half, guys. I'll leave it at that. I'm excited. We got a different climate, a different market, hopefully. Listen, under the hood and individual names, it's different anyway. Stocks have been mangled, right? Stocks have been mangled out there. Mangled. Mangled. So I'm looking forward to playing in individual names again. I really am. That's my thing. I don't like just playing the market. You know, because I pull my hair out of my head. Like, see, and that's why, like, I want to sell my April, Stephen. When I'm not playing individual names, like, I feel like I got to do something, right? I feel like I got to do something. And then I sell, and I'm talking to myself a month or two later, if not sooner. All right, guys, so let's see. Again, we got one more week where we got to deal with the crap earnings wise, and then we start paying attention to names. All right. And again, be patient. You missed the rally, don't worry. There'll be opportunities, trust me. Wait for it and be ready the next time. Yep, guys, always a pleasure. Thanks for stopping by. All right, good luck the rest of the week, and I'll see the majority of you mañana. Later.